Welcome, everybody. In just a moment here. So, still waiting for some people to join before we start the stream. All right. So, let's get started here. First of all, welcome, everybody. So far, we were able to get the past two earnings calls right. Let's see if we can make it one more. So, no guarantees, but let's jump into it. So, first of all, let's look at everything that needs to be looked at today. So, you guys know how this works, especially if you're MSW members. Start off with the triggers. So, we have about 12 minutes till I think price starts to move. So, let's talk about, how did we get here? Um, what happened over the past week and stuff like that. So, to start, we know that when the hourly and the daily triggers cross below the weekly trigger here, that put GME in the most bearish trigger orientation. See the trigger orientation trend on the bottom. And it was all short for a long time. And once we had the monthly trigger on top, then the weekly trigger, then the daily trigger, and then the hourly trigger, price lost half its value from about 22 to 11 here. Then we noticed as GME was starting to bottom here, we noticed a couple of things. First of all, start off with the daily velocity. We saw some really clear bullish daily velocity divergences. So what that means is that as price was making these lower lows, so you have 1, 2, and 3 lower lows, you can see velocity printed its most extreme print over here. Then as price was making these 3 new lows, daily velocity was actually getting better and better. And what this means is that big money, or at least people with pockets, were accumulating the dip on these dips. So on this one, on this one, on this one, and on this one, because if they weren't buying the dip here, velocity would not be able to diverge. So the fact that, if you look back here, as price was coming down, velocity kept making new lows. And what that tells you is that no one's buying the dip here. And even though it popped back up to the daily trigger, it was rejected. But here we saw a totally different story. With each new low, velocity was diverging, telling us that big money was starting to accumulate the dip. Now the triggers were still bearish, but this was our first sign that we were seeing some buying. Then, because we had the bullish weekly divergences, what that does is because we had the bullish daily divergences, that helps the weekly velocity start to repair as well. And we saw price get the worst weekly velocity print right here. And then when price made these new lows, weekly velocity was diverging bullishly, which told us that now there's some real elephant footprints here accumulating the dip. So shortly after that, price was able to break above the hourly trigger, move up to the daily trigger, and then once price broke above the daily trigger, it shot right up to the weekly trigger. Now we had the rejection here. Price came down. The hourly trigger caught it 1, 2, 3 times. Made another trip back to the weekly trigger, but that was rejected. And then you could see once price started to sell here, liquidity started getting worse and worse and worse. And that's pretty much where we are today. Now, earnings aside, a very common theme that we tend to see in this situation is something like this, where the daily trigger will, continue to move a drop higher with time, and then price do something like this. And then, if you guys have been following for long enough, this airplane setup, once price is able to break back through there, not only can it head back up to the weekly trigger, but there's a much stronger chance for price to break above the weekly trigger, which can bring us up all the way to 22. Now, of course, above 22, that's when the squeeze starts. You can see stocks like Mara break above its monthly trigger. Now it's accelerating strongly to the upside. We saw CCL earlier break above its monthly trigger, accelerated strongly to the upside. So squeezes start once price breaks above the monthly trigger here. So for GME, still have some work to do if we're actually going to squeeze higher. But for now, this airplane setup can be very possible, especially after earnings. So the daily trigger should be a really good level of support. Even if price does dip down, it could get pulled back higher. Now, moving on to the data. So we saw GME make an attempt, again, for those unfamiliar, this is the inhibition zone when VOEX, which is this pink line, is in the inhibition zone, that is bullish. So for example, here VOEX entered the inhibition zone and price was able to make a nice move to the upside. Once VOEX exited the inhibition zone, that's bearish, price moved down. So we almost moved into it here, but got rejected, almost moved into it here and got rejected. You can see last night, VOEX was turning down, rejecting right off the inhibition zone. So into the inhibition zone, that's bullish. Right here, kind of neutral. Now, the heat map is the most intriguing thing about this earnings. And the reason is because there's purchasing support above price and selling pressure below price. And what this means is that I'm going to take this, bring it back to the chart. All right, so price about right here, looks about right, 14. Scale it up a little bit. Okay. This looks about right. No, still a little more. Okay. Yeah. So essentially, GME, due to the options table, has purchasing support above price. Make it a little thicker so you can see. Purchasing support above price, meaning if price moves higher into the 16s or so, that's purchasing support. And when price moves into here, dealers have to go out into the market and start purchasing shares. On the flip side, if price moves into the selling pressure down below, price moves below 14 or so, starts moving into selling pressure, and dealers have to sell the shares. Now, the middle area, this white area, is called gamma neutral. And this is where price tends to, stay between, and, kind of especially in volatile events. So between, it looks like 15 and it looks like 14, that's where dealers don't have to do much. That's kind of where they like price. That's where they like price to stay on these events. Now, 2 earnings ago, or I might be getting this confused. Yeah, so last earnings, GME had this kind of heat map, and price moved into the purchasing support and was able to rocket much higher. In fact, it ended up moving all the way up to the weekly trigger before it rejected. So if we delete this and we go back to the last earnings, you can see right here, price was able to move into purchasing support and rocketed higher on earnings because as price moved into purchasing support, dealers had to buy shares to hedge. Price moved all the way up to the weekly trigger before rejecting. So when we come back here, see a nice bounce off the daily trigger. When we come back here, we have a similar heat map. If price can move up at any point during this earnings event into this purchasing support right here, so we're looking at anything above 1586, it looks like. If that could happen, then price will start moving into this purchasing support. Dealers will have to start buying shares, and especially with GME, illiquid, as they start purchasing shares, price will rise really quickly and probably move back up to the weekly trigger. So right now, seems like pretty stagnant. Like we just said before, the daily trigger was likely going to provide some support, which it did. And now if price can start moving above 1560 or so, we can see a really strong move higher thanks to the purchasing support. So price will end up moving into the blue. Dealers will start purchasing shares and will continue moving higher. If price can't move into this purchasing support, then, not really much to do. Probably just going to be flat or down. Now, 2 earnings ago, we had exactly the opposite heat map. So there was selling pressure on top and purchasing support on bottom. And that's where I said, I don't know if you could flip this picture on TradingView, but just flip the picture in your head. Imagine the selling pressure on top and the purchasing support below. That earnings was where I was very against purchasing calls, because even if you're right and price does move up, it would have moved up right into the selling pressure. And what ended up happening is that the first couple of minutes GME did move higher, but it moved right into the selling pressure, which at the time was above price, and came right back down, and all those calls expired worthless. So when the heat map does look like this, that's the only time I'd kind of be okay with lottoing a few calls, although obviously I would never do that personally. But that's when I would kind of be okay with the idea of a gamble, because if you do get any bullish price action, if the call would have started and GME would have been able to move to 16 or so, we could have seen it rocket all the way up to 18, 19, 20, thanks to the purchasing support propelling price further up. But when the heat map is other way, then it never really makes sense to buy calls. So I'm not sure if we should be expecting any more price action. This looks kind of, I don't know. I'm going to read the comments for a second. So did they beat or did they miss? I haven't been watching anything. Earnings 0.00 for the quarter. Street expected a loss of 0.08. They missed 18 cents per. They beat. What are you talking about, Snowcase? So yeah, either way, I guess my expectation going forward is that we're going to have pretty much what we spoke about earlier. I think GME will get tight in this range, and then once the hourly trigger comes all the way down to the daily trigger, I think we'll get that break, go back up to the weekly trigger, and if we can't break above that, then we're looking at a move all the way up to 22. So that would look something like this. When price breaks above the weekly trigger, you get a strong acceleration. Then you'll have some sort of pullback, and then up to the monthly trigger. So MSW, guys, this was actually very much what we wanted. We spoke about this all the way when price was here. We said if price is going to reject the weekly trigger a second time, odds are that we're going to end up heading back down to the daily trigger. And now that we're here, we can form that bullish airplane setup. So the last time GME had that kind of setup was over here. See, the hourly trigger comes down to the daily trigger, got a nice move higher. This ended up failing, but there was another one here. I'll look for some. I know there was some good ones back when GME was still bullishly above the monthly trigger. So here was a really nice one where the hourly trigger comes down to the daily trigger, and then price is able to make that push higher and explode to the upside. And we had a similar one right here where price, it's the weekly trigger, comes back down to the daily trigger, gets caught up in here, and then once the hourly trigger comes all the way down here, price is able to move through and get that powerful move higher. See if there's another one. No, not really. Yeah. So me personally, I'm kind of hoping that nothing else happens today. It would be nice if we could just close right here. And then over the coming week or so, I would expect a very simple, I would expect consolidation against this daily trigger here. And then once this gets tight enough, usually you'll see price explode higher right back up to the weekly trigger. So that's what I'm watching. If this move did mark the top, because you always just got to speak about the worst case scenario. So worst case scenario is if this move did mark a top, we'll end up seeing the hourly trigger cross back below the daily trigger. And then if this happens, GME is probably going to head to new lows, unfortunately. But that's worst case scenario. Hopefully this doesn't happen and we get the other scenario instead, which is the bullish airplane setup and right back up to the weekly trigger. So that's just about it for me. I guess this was a weak earnings, not much action. Last one was way more exciting. If any of you have any questions, I don't mind taking them. Otherwise, thanks for tuning in. That was really boring. What, price is like 10 cents lower? Really boring earnings. The Discord sold puts. That was the move for us because you sell puts. It's like $1.70 each, so you get free $170 if it closes flat or higher. And even if it goes down, you end up having to buy more GME shares at 13. So I know somebody sold 100 puts, so that's a really nice gain right there. Very happy for them. All right, that's it. I mean, really not much going on. This was a very, very boring earnings. So, all right, that's it. Okay, I'm gonna close it up here. Have a great rest of your day, guys.